Hello everyone, welcome back to Upside Down Data. Today I want to talk about Elrond and what some of the implications might be of its recent play for the payment space. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So with Elrond, I put out a video recently where I talked a little bit about some of the moves they've been making towards the payment space, basically offering blockchain-based rails for payments for merchants to accept. And I want to talk a little bit more about what I think some of the implications of that might be. So I'm just showing you here the price chart, just kind of to contextualize this. You know, Elrond is settling back into the same kind of general range it was in for a while back in the spring back here. And I think in these kind of bearish moments in the market, like we are right now, with, you know, Elrond being well down from its all-time high, Bitcoin being well down from its all-time high, etc., then fundamental factors start to matter a lot more for these projects, right? You know, they can't really just rely on just blind hype during a raging bull market, you know, like what happened here, just blowing up along with positive market sentiment. There really needs to oftentimes be these kind of fundamental factors that give a network intrinsic value to help it subsist and persist in bearish times. And that's where I think this play towards the payment space might be offering Elrond a way of differentiating itself from the rest of the crowd. You know, right, there's a lot of other layer one blockchains out there that if Elrond was merely trying to just compete for, you know, DeFi adoption, I'm showing you DeFi Llama right here, and Elrond sits at number 18 in terms of total value locked, which is respectable, but there's a lot of competition here. There's tons of competition in this space with other layer one smart contract platforms for this kind of role. And one of the things that I think was interesting or caught my eye about this move towards the payment sector is that this isn't something that you've seen from a lot of other layer one, you know, smart contract enabled platforms. There's some other, you know, protocols out there that are all about payments or exclusively about payments. But a lot of those aren't, you know, full-fledged layer ones with smart contracts and the capability of having, they don't have the versatility of something like Elrond would necessarily. You know, Elrond being in an interesting space, being a layer one where, you know, it can have other tokens on top of it, it can have stable coins. One of the other interesting pieces of news that came out was this move where when Elrond bought TwizPay, it also kind of opened the door for them to potentially be issuing stable coins. And obviously there are other stable coins that could exist on the Elrond network as well. You know, USDC, for example, already being on there. And so it's not just Elrond that can be used for payments, it's also stablecoins, which some might view as being preferable rather than a more volatile asset like EGLD. Now, why am I bringing this up? Well, I think what's interesting is, let's take this to the logical conclusion, right? Let's imagine that Elrond is wildly successful and they start to break into the payment space and start competing really with companies like Visa, MasterCard, PayPal, etc. All of those kind of fintech companies that we think of, you know, with credit card companies probably being the most visible thing, but also things like PayPal, Venmo, etc. also being players in that space. And what I want to do is just speculate, and this is going to be wild speculation, so take everything I say here with a pretty big grain of salt. But I just want to do some wild speculations on the size of this market, and then in, you know, a crazy situation, what it would mean for Elrond to actually capitalize the best possible scenario. Let's imagine they somehow capture the whole market. Obviously, that's impossible. That's never going to happen. But I just want to go through a thought exercise and just see what kind of money would flow in to Elrond should something like that happen. So what I'm showing you here, so it's actually surprisingly difficult to find good data on this here, the total global number of credit card transactions, but this is the number I was able to come across after some sleuthing online. 468 billion credit card / debit card transactions per year. Now, take this with a grain of salt. You know, I only found this from one source, so I can't back it up with other examples, so I'm not sure if this is really the number, but let's just imagine it's somewhere in this ballpark, right? And then some other sources I was able to find the amount of volume of US dollars in billions across the different credit card companies, and you can see it's quite massive, which might suggest that this is not totally outside the realm of plausibility if this much money is being transacted in a given year. That's data from 2019. So if we know that, then why does that matter? How can this tell us anything about what would happen for Elrond? Well, if Elrond were to somehow magically, let's say, capitalize on all of this and take this kind of transaction, how much EGLD would people have to buy just to cover the transaction fees for all those transactions, right? The whole idea with Elrond being a vector for payments is that people will be using the network to make payments. They'd have to be paying transaction fees for every single payment they make, just like anyone else who's using the Elrond network. And so with Elrond, we know how much EGLD it costs for just a simple transaction. In this case, 0.0040 zeros and a 5 EGLD. So at current prices, it's around $0.007, so a little bit less than 1 cent per transaction. So pretty cheap. And then what we can do is just some simple calculations. We can say if, let's say all payments that are currently being handled by the likes of Visa, MasterCard, etc. Let's imagine if they were all suddenly being done via Elrond now instead of those respective companies. How much EGLD would that require for this number of transactions in a given year? Well, the answer is 23 million EGLD would be needed per year to cover that number of transactions. That would be $3.4 billion worth of EGLD every year just for the transaction fees. Should all of the current transaction fees transactions, currently being spent or being done on credit card companies be done suddenly on EGLD. Now, obviously, this is a ridiculous scenario because, even if blockchain technology could take over the payment space, Elrond would absolutely have competitors in that space, so there's no way they'd capitalize on the entire market. Well, this does give you a sense of just what is the kind of realm of possibility, well, not possibility, but the most extreme case, and then you can adjust down from there. And imagine, even if EGLD only got a fraction of that market share, even if it was at only a tenth of that, that would still be $300 million a year. If it was at, a hundredth, that would still be $34 million a year coming in just for transaction fees on the EGLD network. And so that kind of gives a sense of, I think, what Elrond is ultimately trying to go for. Now, obviously, there's no way they're expecting to get anywhere near that kind of market capitalization anywhere in the near-term future. That's something that things would have to go very well for them to eventually get up to that point. But that's kind of the market they're trying to break into, because there could be quite a bit of cash inflows that could come into EGLD just in adding it into the payment space, in addition to all the other demand that could come in from its ecosystem. Because remember, Elrond is a layer 1 smart contract platform. There's more uses, more vectors for demand than just payments. But this would be another huge well of capital inflows beyond what could be expected from that other model that a lot of other layer 1 blockchains are currently competing with Elrond for, just like DeFi, NFTs, that kind of stuff. Now, you could ask the question, okay, but then why the heck would vendors ever have motivation to switch to something like Elrond? Well, they actually would have a pretty strong incentive to do so. And this is really, I think, where it's difficult, is that businesses really would like for people to be paying in crypto, probably. I mean, assuming that regulatory issues and things like that could get sorted out. There's currently a lot of issues with things like capital gains taxes getting incurred on any crypto transaction. Like, for example, if you were to make a payment with EGLD directly, if that was realizing a capital gain when making that payment, you'd have to pay taxes on it. It creates a huge hassle for anyone trying to use it as a payment. So some of that stuff will probably have to get sorted out before this could really catch on. But if that stuff were sorted out, businesses would probably love that in comparison to the current situation, because these credit card companies are charging a massive amount for every transaction from the merchant. The transaction fees are, in the ballpark of, around 3%, 2 to 3%, between like 1.29 and a little over 3% on the most extreme sides here in these different companies. And that's every single transaction. That's a fee on whatever the total dollar amount is. So you can imagine that as a vendor, you're paying a lot of money just to be able to process credit cards. It's quite expensive, actually, as a merchant to process credit cards. So you can imagine that they'd love an alternative where not only is it just cheaper flat out, but also it's a flat fee. The idea of being with Elrond's transaction fees, it's less than a cent per transaction, no matter what the dollar volume that's going through that transaction is. It could be $1, it could be $1,000. You're still paying less than a cent for that single transaction. Whereas on these other, these credit card companies, you're having to pay a pretty hefty premium. There's actually a cost calculator that's out there for comparing the Elrond blockchain to some of these other things. And so what you can do is you can just put in some hypotheticals. So let's just say you did, one transaction in a given day. on the Elrond blockchain, it'll be around 1 cent, a little less than 1 cent. But you can see how much that one transaction would cost processing it via credit cards or some of these other vectors of payments. Or if we go up and just boost this up, let's say you did 100 transactions in a day and the total was $1,000 that you transacted. Well, now you can see you're still paying less than $1 with Elrond, but you're paying quite a bit of money now suddenly just for this. Out of this transaction volume, out of this $1,000 you're bringing in over these 100, you're paying out $60 around from these versions, around 23 from these versions. You can see the amount that you're paying here. You can imagine someone who's doing a lot of throughput in a given day for a lot of capital. It starts to add up very quickly how much you're paying these different companies to handle those payments. Whereas with Elrond, it's going to be way cheaper. And so that's really what Elrond is trying to do here. And really the incentive is on the merchant side. Now, one of the things that's unfortunate about that is that to the individual user, to the individual consumer, unless it makes their life easier somehow, they're not especially incentivized to switch, right? So merchants are incentivized to switch. There's this very real financial incentive for them to switch. But consumers aren't really. Consumers, it's really easy to just carry around a credit card. A lot of consumers have never used crypto before. They don't really understand it, know how it works. I think those of us who have been using it realize it's really not that difficult to navigate with crypto or something like Elrond that's so quick to transact. It really wouldn't be much of a difference to pay with Elrond versus a credit card. But I think a lot of work would also have to be done to get consumers on board in any kind of volume that could get us to those kind of numbers that we're talking about before. Obviously not getting all the way to the entirety of the transactions across the globe on credit cards. That's obviously absurd. But even just a small fraction of that, I think that Elrond is going to need to... there's going to be a lot of onboarding that's going to happen with consumers. And who knows, maybe if this gets more feasible from a regulatory perspective, merchants might try to start kind of incentivizing that in some way, switch people over. Because really, with merchants, they could actually offer pretty nice discounts to people to pay with crypto and still come out ahead relative to them paying with credit cards. So things that could happen there. And really, with this acquisition of Utrust by Elrond, that's what Utrust is all about, kind of interfacing with merchants or with vendors to try to integrate crypto payments into their systems. That really seems to be what Elrond is going for. So I just wanted to make this video. Obviously the scenario I gave was extremely far-fetched in terms of, any expectation that Elrond could ever capitalize that. But I do still think the point remains that even if Elrond could capitalize just a small sliver of that overall transaction volume that's happening for payments, that could lead to still a pretty sizable, pretty notable influx of money into the Elrond ecosystem that could then buoy it beyond what it might expect from its adoption on its ecosystem. And one other note with Elrond is one thing that's nice on their website is they actually have metrics for on-chain data of wallets with non-zero addresses. That's what I'm showing you here with this teal line here. And you see that Elrond is a growing network. It's kind of up and to the right overall, just slowly and steadily. So they can continue doing that, and then especially integrate something like payments, as well as trying to build out their ecosystem. That could be a thing that if they're able to be successful, that could set them apart from some of these other layer 1 blockchains that really aren't making moves in that direction. Now, the caveat of this is that this is incredibly speculative, that this is all in the future. We have no guarantees they're going to be successful at this and that this is going to actually pan out. I think that's where we're going to have to be watching this and see how it progresses. Can they deliver on this possibility, on this potential? And if so, this could turn into something quite meaningful. But obviously, plans are plans until they fail. And so we don't know if Elrond's going to actually be successful. If they are, it could be a very winning combination, but we're going to have to wait and see. Now, the final thing, just to wrap us up, I always like to show our risk model, the upside downside potential indicator. And so I just want to show that for EGLD right now. I'm showing you the long-term version of the model that cares about moves that play out over months. So if you're not familiar, this is a machine learning based model that we have here on the channel. So you'll identify these high risk, these red zones, and low risk zones in Elrond's price action, where accumulation and distribution have been advantageous. And you see we were in this kind of green zone here. We've kind of popped up a little bit back up to here, and we can actually see this if I just flip over to the raw levels. We're down to around -1 in the long term, negative 0.6. Medium term, we're actually dipping quite deep down here in the short term UDPI, negative 2.13 with this more recent drawdown, which might suggest that in the short term we might expect some relief coming in, especially if the broader markets allow it. If Bitcoin doesn't capitulate or dump, that could certainly be a thing that we could see. So my overall assessment with Elrond is I think they're working on some interesting things. Obviously, I think a lot of work needs to be done to kind of prove the point and show that they're going to be able to turn this into a meaningful development. But if they are successful, I think this could set them up very well for the future. All right, if you like the content, remember to subscribe to the channel, give the video a like, and go follow us on Twitter. We put a lot of updates out there about our indicators and more.